Hello, everyone. Welcome to another episode. We're talking about the 10% of people that cannot get a bank loan, but really, we're just here to help and support everyone. So today we have a guest, Sean Adams, and really, I'll let Sean introduce himself. But he used a term that often we don't use a lot. It's always about trying to get pre-approved, and if you can get a bank loan, great. If you can't, what are some different options? And Sean will talk about maybe some different things that he's gone through. But he has a unique story, and he even said, hey, I was in that or am in that unimproved category for homeowners. So, Sean, can you tell us a little bit about that situation and a little bit about yourself?
Yeah, I'd be happy to. First off, Adam, thanks for having me. It's a pleasure to be here. And yeah, when I first reached out and found your content, I resonated well because I've been an entrepreneur since, basically I've been born, right? So 14, 15 years old, I started my first business doing some contracting work and scaled that into a full-fledged service business. So inherently I am sort of unloanable from a bank's perspective. They look at me and they're like, yeah, this is not someone that we're interested in. They want a whole bunch of documentation from me. And it's been a struggle since then. Unfortunately, I was never taught early on how to structure the business to be able to make sure I could show more income and be more of like a W-2 and conveniently fit in the boxes that the banks like. So it's been a long time learning or unlearning some of those skills to make it fit a little better for what the banks want to see. But yeah, that's my story in the beginning of just being an entrepreneur and realizing that loans, mortgages were not going to be an option. So I was either going to have to, rent for the rest of my life, which was not going to be where I was going to go, or I was going to have to get really creative. And if you like, I can elaborate on the first property and how we kind of structured that.
Sure. Yeah. And do you want to even talk about like, you're like, oh, here I'm an entrepreneur, which number one, I feel like entrepreneurship is hard enough. Why make it more difficult, just in life in general for the home ownership, but maybe share that experience for like, hey, I think I'm looking at getting a property. Like, who are you talking to? When were you first told no? Because entrepreneurs, they hear no and they just hear, well, not yet. And so it's just kind of like a different way of framing it. And so maybe, yeah, if you want to share about that first property or just kind of your initial experience with like, hey, I think I can just go into a bank and I'd like a home loan, please. And just sharing that
I
story.
thought it was that simple because all of my friends had regular W-2 jobs, and that's what it was. They went in, they went through the paperwork or the car dealership or whatever it was, and at the end, they got this fancy loan. So it first happened when I was in high school when I was trying to finance some equipment, and I went in and they kind of looked at my bank statements and they're like, this like 16-year-old kid is trying to get $30,000 for different pieces of equipment. And they just couldn't connect the dots. They asked me for a lot of paperwork that I didn't have, or just didn't have a good record of because bookkeeping was not my strong suit when I was young. So that was always the first set of issues, and I didn't structure it in the proper way. So I ended up having to pay cash for a lot of things. I also got into borrowing some private money from some friends and family to be able to get what I needed done and pay them back with some interest to make sure they were satisfied, but also I could get what I needed for the business. It was very capital intensive in the service industry, so I was plowing money back in. So there wasn't a whole lot of profit being shown at the end of the year. That was the real challenge. Once my girlfriend and I, now my fiance, we went to go purchase our first home, and she worked for herself too, just to keep adding more difficulty to this situation. We went and sat down with the mortgage broker, and we're like, here's our scenario. And he's scratching his head and he's running through numbers and we're shuffling papers. And he's like, I can't show varying different levels of end of year profit for two different businesses. There's not enough consistency. I understand why you have to do it, but I'm restricted. I'm kind of handcuffed here from the bank. We went to the different mortgage brokers. We tried all different credit unions. Same exact thing kept happening. We were tired of the credit hits too. Every time somebody checked into something. So we wanted to get a little more creative. Our first property, essentially how it worked is it was one of my clients. At this point, I was just in the process of selling that service business. So I started it, spent about 8 years, scaled it, and actually went on to sell the business. And one of my former clients was selling a small property in a local town. And I had known about the property and I knew them fairly well. And they had been on the market for a year and a half plus. And it was really unique because it was a historical property. It was 140, 150 plus years old, had some work it needed. And it was also actually listed as commercial, but there was this really unique thing in the zoning. I live in New Jersey, this particular town where you could actually have residential there as well without getting it rezoned. So what we ultimately did is we were like, hey, we're really interested in the property. They had it listed well over what we should have paid or what we were willing to pay. And we sat down, we're like, this is our scenario. We're entrepreneurs. You know me. I've been working with you for 6+ years. We have a relationship. You own the property outright, which I found out. And I thought, I did a lot of my research. I read the books. I started like, what if I could creatively finance this? I wonder if this couple who's aging towards retirement, they sell a property for $150,000. They're going to get obliterated with taxes when they sell that place. So what if I could position myself instead of using my entrepreneur downside of not being loanable? What if I used it as an advantage and said, hey, what if I could give you some cash up front and you hold the mortgage for me? We'll take it off your hands. No questions asked. You don't have to fix anything. We're going to take it as is, but you have to hold it for 10 years for us. We'll pay you every month. You're not going to incur a giant tax bill like you would if you sold the property at once. And now you're going to get a nice supplemental retirement for the next 10 years while we pay off this property for you. And ultimately, that was good enough of a sales pitch after a lot of back and forth. And that's how we bought the first place. And it's something we still live in today. We're looking at some other properties, but that's the strategy that really illuminated this as an option for us.
That is awesome. So number one, way to be creative. And I think you just painted the picture of how this can be a win-win scenario, like, which is a phenomenal way to look at, because part of the reason that we started this podcast is because I feel like there's a lot of predatory and people taking advantage of just because they don't understand how this works. Where somebody's like, yeah, I'll do a contract for deed or an owner financing or seller financing, kind of, those would be the terms, that I would attribute to this. And then there's no paperwork that follows it, or it's kind of a handshake. And then, this relationship that you had with someone isn't as, I guess, cordial. And then 5 years down the road, something goes wrong and somebody's like, oh, well, all that money that I was putting towards something, like, I lost it. And so I love that you started with number one, that these were people that you knew and like worked with and trusted, like, hey, at least we're past that, so that if something else went on, like, things worked out. But then number two, you're just like, this is great. Like, they're getting it spread out over 10 years. You guys get into the home, you can do improvements, you can do whatever you want. You're still living there. And my guess is that the home is appreciated, or that you're sitting in a fairly good position now, just because real estate in 10 years time, it tends to do really good things. So cool. So
100%.
are you still in that? If I dig into that, are you still into that existing contract, or were you guys able to refinance, sell it, do something else?
We are still in that initial mortgage, about 4 years in at this point on the 10-year. And one of the things that we're contemplating now, and we talked about this off air, the building that I'm currently in is actually a commercial space where my wife and my office is. And hilarious how this all works out this way. This is another almost identical scenario where another contact that I had, an elderly woman, purchased this property 25 years ago, historic property in this area. There's a lot of them. It needs a fair amount of work, and it's quirky. So it doesn't fit the box, similar to the bank analogy, right? And so average tenants weren't really interested. They had to do a lot of work, and they had to kind of tweak it, and they don't want to do all that heavy creative lifting, right? So we came in and we said, look, she needs the upstairs, I need the downstairs. What if we could structure this? And as I started to dive into her pain points, and being a salesperson, this is what Sales 101 is: finding out where the trigger and the levers are. And it's not price. Everybody thinks it's price. Oh, the person just wants to get the most amount of money. It's rarely the case. It's a component, but it's rarely the dominant force. In this scenario, this woman had got this property listed on the Historical Society. So all I did was just have a long conversation and teased out this information from her. What I found was they were going to demo the property. That's why she bought it. She wanted to save it. So she got it listed on the historical registry. It's a beautiful building that, it looks really cool. But like I said, there's a lot of creativity that needs to be done with it. So ultimately, we're in the process of trying to negotiate a lease option, because we're not in a position to buy it fully right now. But we want to actually do a cash out refinance of our residence and possibly use that here to purchase into this property. And the idea is
what would you describe as a lease option, just for those that don't know?
Yeah, so we were going to do something like a 4 to 5 year lease. We're still working through the details here, where we would keep renting like we're doing now, but we'd have the option at any point during that period to exercise our purchase of the property for an agreed upon amount. The advantage to that is if something happens to her, or she gets incapacitated, or wants to sell, we have kind of first right of refusal at this set agreed upon rate. It's not something we can afford at the moment, but we know we'll be able to in the next couple of years. But even if we can't, we don't have to purchase it. So it's sort of optional for us. And that puts us in a really good position. And it gives her the guaranteed locked in lease. She knows she's at least getting that rent. The advantage there is now I was able to get a very attractive purchase price from this, because what I found out was she recognized that the other property we had bought was historical, and we
Mhm.
care about this type of property. That was the most important trigger for her, not the price. So I was able to say, I'm not going to demo the walls. I'm not going to change the footprint of the building. We're going to respect that, and we're going to do it with all that in mind. But I'm going to need it at this price so that we can do that. And so that was the buying power for her. And yet again, we're talking to the person's emotion and tying it in to make it a useful deal that's almost hands off for her. So just another example of how this works.
And it sounds like you're trying to tie the two of them together a little bit, right? So you're saying maybe elaborate on that a little bit too, where you're looking at your existing home and trying to figure out if there's any equity there or leeway. What does that look like?
Yeah, that's the perfect world. The math we're still doing now, and we'll have to involve a bank with that at some point, likely. And the idea would be to do a cash out refinance of our residence, so that we could pull out, couple, that lump sum of money from there, and be able to either use that as a down payment if we wanted to purchase here, or part of the renovation budget, or maybe a split between the two. That way, we could have a lower rate and maybe a longer term on our residence, pay off the old seller, and be able to get this new property, which we could kind of rinse and repeat this process on, because we're getting it with built-in equity, and we could rinse and repeat that into the next property. So that's the holy grail option if we can pull it off. There's some other things that need to happen there, and time frames are involved, but that's the idea, is being able to leverage one into the next.
Pretty cool. And so, doing all of this without a bank is like, kudos to you guys for figuring out. And so what was your resources or availability? Was it just like, hey, I'm just going to start asking people? Do you just listen to podcasts? Do you read books? You kind of alluded to that a little bit. And for everyone that, can't see on it, there's a plethora of books on your showcase, or on your bookshelf there. But what was that process like? We're like, hey, I can't get a bank loan. Now what? Like, what was step number 2 for what you
Yeah.
did?
Adam, forcing functions are an amazing thing, right? It wasn't like, oh, I don't feel like dealing with the bank. It was like, I can't use a bank. So I could give up, like I said, or we could get creative, right? And so that's when I thought, there's other entrepreneurs out there. There has to be other ways to do this. So I started networking and asking around. And that's where the books come in, the podcasts, and really trying to elaborate on, what do the ultra wealthy do? What do big banks do when they're going to lend, right? There's got to be some other resources and solutions. There's plenty of unprofitable businesses out there that get huge amounts of funding because they know how to structure the deal. And so that's when I went on the deep diving side. And just to tie into what I do, my day job with, leverage life management, is almost an anti-bank strategy in itself. We actually, and this ties into how we funded a lot of this stuff. We show people how to use actually a very strategically structured type of life insurance to store your cash in, because it's actually almost like a flexible savings asset. You can store cash in this thing; it gets guaranteed growth, and you can actually leverage the cash at your choosing whenever you want, to make purchases in real estate or personal purchases, anything in between. So it was a matter of me, that old quote, if you want to be wealthy, do as the wealthy do. I just tried to figure out what other people are doing. They're using other people's money, and basically learning how to leverage that and structuring it properly. And what I found was, you don't need $1 billion in the bank to do this. You can do this if you've got $5,000 in your checking account. Like, there are secrets, there are recipes for how to speed up and build your wealth, but nobody teaches you these things. So my mission at Leverage Life Management is to distill and reveal down these secrets, so that everyday people can do this, because I'm just tired of people, one, giving up because they think there's no options, but secondly, having to alter their lifestyle because they made a decision to work for themselves, or whatever that might be. I don't think that should be something that really is a huge disadvantage for them.
Well, let's dive into that. So you talked about your entrepreneur journey from, the service industry to kind of where you are now, and maybe there were some different steps along the way. Maybe talk through just that entrepreneur journey, and then kind of where you're at now. And really, I like that kind of idea that you're helping individuals just kind of financially understand money, and how different levers and tools can be applied, because some people are like, oh, I have a savings account, or I have a retirement account, or I have, a loan, or I have, something else. And you just realize that there's so many different light switches on the wall for what you can do. So maybe just explain a little bit on kind of what entrepreneur journeys that you've been in, and then now kind of what you've landed on and what your full-time day-to-day life looks like.
Yeah, yeah. So I found this in all three sort of professional avenues that I went through. I ran that service business for about 8 years or so and sold it. Then I did consulting work, helping small businesses kind of take advantage of some of the things I had utilized in the service business, systems and processes and documentation and software. I did a lot of coaching with small businesses to help there. Did that for about 3 years. And then I actually went on to do some software sales work, believe it or not, tied into some of the consulting work I had done. And I was a W-2 employee for a few years there, which didn't always fit my personality, which is why I work for myself again. But in all three of those career paths, I had this same experience happen to me. I would be doing really well. We start making money. And it's like, okay, all the content, all the education that I had was how to get me from 0 to 1, how to get me from unprofitable to profitable. But there was nothing to show me how to get from profitable to building wealth, right? Where was that gap? It was always like, okay, well, now you're a profitable business, as if that was the summit of the mountain. And it's not. It's about how we put that cash in the right places. So I'm building wealth so I don't have to work until I'm 70 or whatever that number is for people. And so I wanted to really find that. And when I looked at 401ks and IRAs and even different types of funds and things, I just didn't see them being useful tools for me in building real wealth. They were way too risky, or they were way too restrictive where you couldn't use them, or they weren't that tax advantaged. And so again, that's when I really started to learn more about what the wealthy were doing. And that's what we call our leverage wealth accounts, which are these specific types of life insurance policies. And it was a saving grace for me, Adam, really. It was a place that I could put cash. I'd have this death benefit, which is obviously the main component of life insurance. If anything were to happen to me, my wife would be covered. My children in the future will be able to be covered if anything happens there. But more importantly, there were living benefits. The cash that was paid in, once it became cash value inside this policy, it got superpowers. I was getting a guaranteed rate of 4% on the cash that was in there every single year, compounding. No matter what happened in real estate, no matter what happened in the stock market, I was getting 4%. It's not a crazy home run, but it's guaranteed every single year. It's a safety net. I was also able to leverage that whenever I wanted on my terms. It wasn't like I had to keep, using it within a certain window or at a certain age. And I could put as much money as I wanted in there if it was set up correctly. And then the tax advantages, have to get really in the weeds there, but there's many ways you can use the cash through leverage without incurring any sort of tax implication. So for me, it was just this incredible tool, and I couldn't believe that more people weren't talking about it. And so that's where I started to go, okay, I got to start a firm and just help people to see this light, to see this tool. And that's what leverage life management is. And we work with individuals that might be on that sales roller coaster, and we work with entrepreneurs that have the cash flow constraints and they need a more flexible asset to stick their cash.
And who or what areas are you either licensed or can you help? Is that anyone in the United States that, hey, if they're listening to this podcast and like, hey, I got those ups and downs where like, hey, if I just, put away 10 grand, 20 grand or 30 grand a year that I just kind of, put into this, kind of high savings account that I can then borrow if for some reason I need a down payment on a home in 2 years or 3 years, who can you help, Sean, or you and your company?
Yeah, anybody in the U.S. So you have to be licensed as a life insurance agent in every state, and we are in the U.S. So anybody there can take advantage of this strategy. You can also take advantage of this if you are in Canada. I just personally can't sell to you, but this is something that does exist in other countries outside the U.S. But for our purposes and the way the banking and insurance world works, anybody in the 50 states.
And I'll have some links for how people can find you. But if people are specifically interested in that and they're listening, what's the best way to get a hold of you, Sean?
Yeah, the way that these accounts work, it's on a case-by-case individual basis. So it goes by your age, your health rating, the amount of money that you make, what you're looking to contribute, how long you're trying to contribute. So I'd love to be able to see that there's like a set amount of pricing. It just doesn't work that way. It goes individually. So the best real option is to go to my website, which is leveraged-life.com. What we normally push people to is one, to check out a free video course that we have. You don't even have to put your email in, it just has a bunch of videos you can look at, teaches you about this topic. But the best sort of individual approach is to go book a free wealth audit, we call it, which essentially it's a 60-minute call with myself. We break down your scenario, what you're looking to accomplish, where you are now, and then we actually build up illustrations or documents that show you projections. If you put this much money in for this amount of time, what the cost would be, what your break even would be, what the growth would look like, so on and so forth. And that's all documentation you get to keep. We just like to educate. So we'll send you all that information on the call, and then you can figure out if it's a good fit for you. But we always like to push people to that.
I love it. So as we kind of tie the two pieces together of being like, hey, I was told no, number one, and then number two, I'm not going to stop being an entrepreneur, and just get the W-2 job because, people aren't exactly wired. And that's, I would say 90% of the listeners or the individuals that we help, they're, have their own daycare, they have their own, tech or consulting company. And the bank looks at them like, oh yeah, you're making $20,000 a month, but you're also writing off everything else, right? Because entrepreneurs really don't like to pay taxes at all, or they like to, maybe discount things a little bit. So as you're kind of balancing that whole, we're in a home situation now. We are the entrepreneur. What do you think are other challenges, whether it's financially or home or other things that entrepreneurs potentially struggle with, just that is getting kind of poured on them, where just making any sort of financial decisions, whether it's like, starting a life insurance plan, or whether it's, just to stay renting, or whether it's like, to invest in themselves? Because you're, in my opinion, right in the thick of things where you've got, you've done the entrepreneurship. You're like, hey, I've gotten creative and now I'm kind of in a stable situation with the home. So what do you see as kind of like the next hurdles for Sean as you're going into this? Is it going from one to many, kind of within your personal business, or what's kind of the goals for this year for you?
Personally, with my business, the challenge is overcoming the stigmas, right? One, talking about anything with finance turns a lot of people off. Secondly, if you bring anything up about life insurance, they typically escort you out of their room pretty quickly. So combining the two of them makes for a big challenge. My goal, being a younger person attacking this industry, is to really focus on education first, like I mentioned. So the big hurdle for me is getting this out there and overcoming some of the stigmas in the market, because there are a lot of big pundits, the Dave Ramseys, the Susie Ormans of the world. They have their place out there for helping a 9-to-5 person get out of debt. They do a great job there. But there's a lot of false information that gets broadcast to everyone that makes $10,000 to $10 million a year, and it's taken as broad level advice. And it's just not the case. If you're working for yourself, the things that they're subscribing you to are not going to be as applicable. So for me, it's overcoming some of those things and showing people that you have to get creative with how you think about this. And I always say, do as the wealthy do. Like I said, you don't have to take my word for it. I put together a presentation about this where you look at, the Warren Buffetts and the Walt Disneys and the Rockefellers and all these people. If you track back into their history, you will find cash value life insurance was used at some point to either fund or use as a legacy plan in some way. And so I like to just mirror what they do, but it's overcoming that stigma that, why haven't I heard about this? And it's mainly because it's been marketed to the top tier echelon, and it's much easier to sell 1,000 people a 401k that they make, 1.5% on, than it is to individually sit down with people. So that's my big hurdle.
And I think for anyone listening to that, it really hits home. So if I think of the analogy, so Sean just talked about, doing education and getting over those different things. Exactly what we're doing here on the podcast is we're hoping that this conversation is either, that Sean showed you on to, either cash value life insurance, or how to do, owner financing, or, pros and cons of lease options, but then into people's individual businesses. Because a lot of individuals are entrepreneurs that are listening to this podcast. It's like, oh, what can you be doing to educate other people as well? And so just from a practical standpoint, I really like that, from the goals of what you're trying to do to overcome that, because entrepreneurs are not very mainstream media. They happen to be a lot of leaders and challenge the status quo. And so by doing some of these things, it is a lot of like, okay, I got to get educated. So finding people like Sean, that's like, hey, just go on here and educate yourself. And if it's for you, great. If it's not for you, that's fine too. And that's, really the power of it. So how do you manage your time these days, Sean? Given, maybe, different people have either families, or, the fact that you're maybe looking to get married, or you're kind of your business, but how do you see valuing your time? Because a lot of people say, well, I either have time or I have money. And when they say, well, I don't have either time or money, the argument is usually, well, you're probably not using the best use of your time. And so maybe just practically from an entrepreneur, just how you view time management. And it seems like you're pretty well, motivated and probably study some, self-improvement or self-help or personal development, however, you want to coin it. But what does that look like for you, Sean, on time management?
Yeah, time management is something I really nerd out on because I was so bad at it for so long. When I ran my service business, I was a scatterbrained with stuff everywhere and the papers all over the dashboard, never knew who owed me what and all that kind of stuff. And it was crippling from a business perspective. And it's the same thing professionally if you're an employee as well. And it was getting hyper practical about my calendar that every moment I wanted to try to optimize and not to go insane and be so anal that you can't, even function. It's about me. This concept I use of applying a dollar per hour to my life, to my output. There are tasks that are $2 an hour tasks, and there are tasks that are $2,000 an hour. So when I look at my calendar and I see myself answering the email, posting something on social, checking a box on some stupid form or whatever, those are $2 an hour tasks. Where can I outsource some of that sort of stuff? Because my best use of time is to be face to face with people where I can be doing $2,000 an hour tasks. And so I look at my calendar and go, where can I remove stuff? Where in this white space could something be optimized so that I'm making a higher dollar per hour output? And so that's a big focus for me. It's kind of a filter in which I use. It's a work in progress for sure, but I am religious about my calendar. Whatever, if I'm doing outreach and I want to send some messages, it is on my calendar for 15 minutes for me to do that. And it will drive me crazy if I don't check off that box that I did that task. So it's just about kind of retraining your brain, running your personal life or your personal schedule like a business, right? If you were to set up an employee in a perfect scenario and blueprint their entire day and exactly how they got optimized, you should be doing that for yourself as well. Run your personal life like an enterprise.
I love it. So we touched on really the heart of kind of what the podcast will be talking about, which is basically going from unapproved to being able to get a homeowner to now even structuring kind of your second deal. Dove a little bit into you, Sean, and then kind of your philosophies and how you operate. If we had to circle back to the end on kind of that first deal that you had done, where you basically said, "Hey, we found this." They were able to get super creative. Are there any numbers or advice or different things that you can share on either finding those people or how to structure it? If somebody's like, you know what, I can Google seller financing or contract for deed or owner financing, but I still don't know if I know, like, what piece of paper should I sign? Like, how do I go about doing that? And of course, we're trying to educate people, but it's always nice for someone that's either currently in it or going through with it on just like, hey, here's some tips or things that we looked out for and things that you've done that maybe worked out well for you.
Yeah, it's been tough with the pandemic because there hasn't been enough time to really get face time and effort with people. But I think that makes a huge difference. So, for example, we have a couple of neighbors and we've had conversations with them and just talk about what we have going on better and listening to what they say. I mean, I can't underscore the listening component anymore. Every single one of these deals that we've been able to put together or look at, it's about us truly listening to that person and understanding what the underlying message is that they're saying. And so when someone says, "Oh, I have a property for sale," that could mean a multitude of different things. And also, most properties are for sale. If I were to really dive deep into something, the book 3 Feet from Gold, right? There's so many people that don't realize that there's opportunity on your street in every market, in every spot. You just have to uncover it. And so it does take more work, right? But you could curl up in a ball and blame someone else, or you could start having as many conversations as you can, not in a super salesy way, but just saying, "Hey, Adam, starting a conversation with someone and you find out that your son is going away to college and it's 6 hours away and you don't want to be away from him and he thinks he's going to stay there. So I might rent out my house and I don't know what I want to do." Poking around with more questions and really understanding from an empathetic level what that person's drivers are. And again, it's rarely money. That's not the main driver. And find out that person would love to lease that property for with some kind of option. Or maybe they just don't want to tackle a burden of having to redo the roof or clean out the place. And you go, well, that's an area of value I could add. Look, I'll take it off your hands. I will do X, Y, and Z that I know you don't want to do. And now you've solved a major problem from them. you hear all the time like add value, and it's a very like broad level thing, but you got to get super practical. If you were going to make something happen, what is that driver behind what's making them want to make a decision or not? And oftentimes people have never even thought about it, right? They might be in a property and they're kind of stuck, or they're getting elderly and they don't want to do the steps anymore, but the mental bandwidth it takes for them to make a choice, to make a move. How can you remove some obstacles, solve some pain for them, make that easier? I think that that's a thing that is universally applied across any market. And when you have more conversations within your community and people see you face to face, I think it makes the world of difference.
I love it. And that's probably a good way to kind of segue to the end here, because that's really where we've transitioned, where we were trying to find, homes that were available for owner financing or lease option. And then we started hearing about, different national companies like Divvy Homes or Home Partners of America, where they do this nationally. But what you talked about is like, hey, I found someone. And that oftentimes is the best thing. Okay, bank is great, but if you can just find an existing property that somebody's, motivated, and like you said, you just have a conversation. It could be an uncle, it could be a friend of a friend or a family member. Like, what a great opportunity to just get to know another human being. But turns out it might turn out to be a 4-year, 10-year, decision that's going to be paying off for multiple years. I love it.
Yeah. And people don't want to deal with strangers. It's really overwhelming. Like that can't be stressed enough. How often it's hard for people to think about listing a property and finding an agent, getting a moving company, and having a stranger in my home, walking around, touching my things. They hate that kind of stuff. And that makes selling just negative to them, where it's like, oh yeah, I'm your neighbor. I'm your, we go to church together. Our kids are on the same team or whatever. That is a relationship that's already built in, that it can pay huge dividends if you actually listen to that person.
I love it. So there's multiple ways that Sean mentioned that you can get a hold of him. So, the easiest one being leveraged-life.com. And then you can find them on LinkedIn. If you just go LinkedIn and then /leveraged-life as well. And then he's got that free kind of crash course either on his website or on LinkedIn. You can find those both ways. Anything else, Sean, that you want to share, or ways that people can get a hold of you?
Yeah, we're on other platforms like Instagram and Facebook. LinkedIn's really our main one. When we have a YouTube channel as well. But yeah, if you start on the website, that's the best place. You can kind of disperse out from there. Again, we really like to focus on education. So if you just have simple questions or like, oh, this is all very overwhelming, it's a great place to just do your own due diligence through some of these videos at your own pace to see if it's even remotely an option. So I like people to start there before I try to feel like they're being pressured onto a call or to sign up for anything.
And what a great offer that, hey, go get educated. And if it makes sense, schedule a call with you or somebody on your team member. And then, that'll kind of give a 60-minute where then you can be like, hey, I saw this on the video, or Dave Ramsey says this, what's your kind of counter to it? Because there is like the David Ramsey calls, this a scam, but then somebody else will have another video. Just because it doesn't have as many views doesn't make it any less truthful, where they're like, hey, he's maybe talking old school where we're talking new school. And
Yep.
yes, don't do those type of life insurance plans that he's talking about. But if you do it, kind of structurally, like there is a way. So just not following the number of views, but really getting curious and educated with it, I think is a great use of people's time. So I appreciate you creating that and sharing it with people, Sean. With that,
Absolutely.
thank you for being a host, sharing about how you basically went from unapproved to into the home ownership realm, and then just how you're kind of growing your business. And if anyone wants to get a hold of you, we love supporting entrepreneurs. So feel free to check out Sean. And Sean, thank you very much for spending probably your most precious resource with time. It was an absolute pleasure.
Adam, thank you so much. It was great to be here. My pleasure.
All right. Have a good day.